Reading price charts, bar by bar. The technical analysis of price action for the serious trader. Chapter 12, day trading examples. Table of contents, day trading examples. Market cycle, breakout and trend, channel, range. One thing I wanted to say is these are all my own slides. The book has completely different slide examples. I use the market cycle to stay on track and demonstrate how to place trades. So within the book, Al has just charts and he's talking about them. So instead of just having I wanted to have a flow, so I just talked about the different type of trades we could take within the market cycle. But this isn't in the book. That's how I'm going to demonstrate the day trading with some flow. Overview. The market cycle starts out in a breakout, and then we channel and range. Each phase has different types of trades. The breakout can be a buy the close or sell the close. In this case, it's buy the close. Channels have two-sided trading, so we can buy strong closes or buy the EMA, buy with limit orders. I don't limit order trade, so I wait for good closes and then buy them. In the range, we could take two types of trades. We could take sells at the high, the EMA turn resistance, so we could sell the EMA, and then we can buy this double bottom and take it back to the top. So you could also do limit orders here, but this was kind of a downtrend, so you can market order, make money, or limit order this high, previous highs. This is right here. And the breakout is the start of a new market cycle. The market cycle starts with breakouts and ends with ranges. Breakouts show momentum, and since there's momentum, we assume there's no pullbacks because there's trapped traders. So these bears are all trapped, so they're buying back their shorts, and bulls are buying back, or bulls are buying their longs. So that creates momentum. So we have to market order in rather than waiting for a pullback. If we were to wait for a pullback, we would never get filled because this is a momentum trade. So we have to enter with the market or buy stops. After this, first bar is the channel phase. You can see two-sided trading steps in, but we can still buy strong closes. This is the first reversal. Again, this is the first part of the market cycle and we're down here. The channel phase is the second part of the market cycle where you're looking at the middle. And in the channel phase is where we can see the legs. The breakout is leg 1. Then we have the leg 2s, leg 3s, leg 4s. This is a really strong channel, so it's hard to count legs. In good trends, we don't really count legs. We have to just wait for that exhaustion or get out when the risk gets too big. Because leg counting can go on forever. I'm sure we've all tried to short the uptrend. So channel phase begins after the first pullback. Channel shows two-sided tradings and stick to with trend entries. Experienced traders, I'm sure I'd be surprised if you're watching this, but you can do what you want. Obviously, scalp out every new high. That's credible. That's a credible strategy. I don't do it. So we can buy here, buy the first pullback on the EMA, buy the double bottom, buy this bear bar because it's bouncing off the EMA. I added limit order trades in for examples. I don't take them. Here's another limit order. We're testing the high of this breakout. So it's a break, retest, bounce off the EMA. Every time we bounced off the EMA previously, bulls bought it. So this could be a good limit order. And it does get tested again. So if you bought this, you might have to sit through a pullback or scalp out or buy more. This is a breakout. It's tough. You can see after this breakout, the market got way more two-sided. This is better for limit order trading. You can still get away with market orders here, but if you were to buy the high of this bar, you're sitting through a pullback. You buy the high of this bar, you're sitting through a pullback. You buy this, you're hoping for a breakout, and then it gets a pullback right away. So this is more two-sided trading, which brings us to the last slide, the ranges. So here we are in the market cycle, the end of the market cycle, and there's two-sided trading. Remember that bar we talked about previously on the channels page? So I was like, there's a lot of two-sided trading if you buy it. That was this bar right here, or is this bar right here we were talking about. And look, if you buy that, you're buying the high of the range. So the range really started down here, and then we came up, bounced off. The range started well before we realized it. We were still in the channel phase, but the bears wrap back around. When bears get the breakout, they're going to target all previous pullbacks. Ranges are the end of the market cycle. Buy low, sell high. Both sides are making money. And gaps are staying closed. So there's a gap here, closes, and then these bulls go for a trend, and the gaps stay open. Bears get the breakout, and they sell off. So this is a market order. And you can also get away with limit orders. Since there's two-sided trading, you can put a limit order at the 50%, 25% levels and sell off. Here, bulls get the double bottom and they break out. And the breakout's showing momentum, so it becomes a stop order. First opposite bar, you can start buying pullbacks, 50% here. If you waited here, you would get filled. It would be profitable. You sit through a pullback, but range is still two-sided trading, selling and buying. This is the end of chapter 12. Please leave any questions in the comments and I'll try my best to answer them. Again, these were all my own slides. The book has completely different slides and examples. I used the market cycle to stay on track and demonstrate how to place trades because they would show you a little bit of everything. Thank you for your time, and if you learned something, please consider subscribing.